Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Stein, Chief Investment Officer of Carbon Collective, to discuss how oil and inflation could create short-term volatility, but longer-term, stronger tailwinds in renewables. Zach, it's great to have you with us. Welcome to Trade Talks.
Thanks so much for having me.
You got it. We know oil prices continue to rise. It's going to keep inflation up. Good for stocks, oil stocks that are related, bad at the pump. What are your thoughts around this scenario?
In general, what this shows is the increasing link between oil prices and oil stocks. As a long-term investor, to us, this is a great time to get out. There's going to be profits to be made from oil stocks throughout the energy transition in the near term. But unless you're day trading, you're not going to be able to get access to them.
But there are other options that you can find that are underappreciated assets. What are some of those opportunities?
Absolutely. The International Energy Agency came out with their latest review this week that said that we're going to reach peak oil before 2030. That's not because we can't find any. It's because we aren't needing as much of it anymore. The tailwinds economically behind renewables, behind wind, behind electric vehicles are only accelerating, and it's always happened faster than we've thought. A lot of analysts are now saying that we're not accurately pricing in the legislation that's happening, like the Inflation Reduction Act and like what we've seen in the EU. So those assets are currently looking underpriced.
Do you think 2030 is a reasonable goal? I mean, speaking for today, we still need that energy that exists to power, not even just traditional power, but to power some of the renewable verticals as well. Do you think 2030 is reasonable and achievable?
Absolutely. When we, again, look at solar and wind and renewables, this is not charity. This is the cheapest form of generating electricity in many places around the world, and that's just going to get increasingly more so. Look at what's happening with oil right now. It's getting more and more expensive to extract. So regardless of, what your political opinion is or where you're looking, the tailwinds are behind the energy transition at this point, and legislation is just further putting its thumb on the scale. It's not going to happen overnight. We were all born into a world that's run by fossil fuels, but that is changing, and it's one of the biggest secular trends that the near term, the day-to-day stock market really isn't accounting for well.
Are there verticals within renewable energy that are more attractive than others?
Wind, I'll take the opposite side of the question. Wind is getting particularly hurt right now. They've been squeezed through inflation and supply chain issues. And then especially in the US, they don't really have nearly as much of an installation base, particularly for offshore wind. So for the long term, that could be an interesting place to look. And then solar is really taking off, but batteries is the place that I personally would be looking at the most, because I think we're going to be seeing those cost curves continue to come down because it's really nicely paired with EVs. As GM becomes a climate solution company because it's making EVs, that's where we're going to be seeing this take off.
All right, Zach, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks, Jill.